Good morning, everybody. Welcome to another episode of the Rise Up Morning Show. Sorry as I don't look at you in the eyes as I adjust my lighting. Today's another day where we're just going to be on my live stream on TikTok, and we will take this recording and put it on YouTube if you're watching on YouTube. Hello from the future, from the past. You're in the future. I'm in the past. You're beautiful. You're great. You're smart. You're intelligent, and we love you. Today's another day where we don't have Evan. Sadly, he is still coming back today, I believe, from Mardi Gras in New Orleans. We will be having Alex join as well. Hey, what up, Barca? In fact, let me send him a note. At Alex, I am live, baby. How's everybody doing? I know the markets are shit, so good morning, crypto machinery. How you doing, dude? I know the markets are shit, so everyone's probably not great. Remember, none of us are really doing great, but I'm pretty happy. Yeah, I know, it's all red. This market is crazy manipulated. So that's actually one thing I want to talk about. We'll start talking about it. Need better squiggles. Hell yeah. Yeah. Have a look at Fart Boy. I think I'm good. I think a coin being called Fart Boy is all I need to know. But what was I going to say? Yes. Let's talk a little bit about market manipulation right now because, it's hard to prove market manipulation at the moment, except for a few things. So right before Trump put out his Truth Social tweet talking about the digital asset reserve, hey, we're going to look at Cardano, XRP, and Solana, as well as Bitcoin and Ethereum. It's been pretty well documented. There was that guy that took a $200 million position and longed at 50x, and whoever that was, it happened 2 minutes before the Truth Social tweet. I don't know. They're not called tweets, but I don't know what they're called. Truths. And he made a shit ton of money, right? We talked about that. But there was another, that same exact guy also shorted the market with that same size position using a shit ton of leverage also, right when the market collapsed the other day too. That dude made something like $600 million in 2 days of trading. So, all you guys have to do is get into a position of government or really high up in a business, and then you too can insider trade. And, once you do that, just, call me. Remember these good times we've had together. And, yeah, exactly. Can I be his friend? I want to be his friend. Or it could just be Nancy Pelosi, right? It could just be Nancy Pelosi. What up, dude? Morning, man.
What's up, man?
Oh, somebody asked, like, man, this market's crazy manipulated. So I was like, I think that's a great thing to talk on. So I told everybody about the dude who said, hey, everyone, a lot of people already knew the guy who had the $200 million position at 50x leverage who longed 2 minutes before Trump's truth tweet. And then he would also set up in almost exactly the same position right before the markets collapsed the other day, which I believe was, there were two reasons why the market collapsed yesterday. Three, really. One, from a technical standpoint, there was a huge gap on the chart after we pumped on the weekend, and Sunday pumps, Monday dumps. I was of the mindset, though, and I was wrong, where, oh, hey, we're both wearing black. Look at us. Is that the same shirt from yesterday?
It's just a sweatshirt, man.
Oh. You should wash your clothes.
Breaking news. Will Watson's never worn a sweatshirt 2 times in a row.
No. Sweatshirts are fine. You can do that. But,
I definitely washed the other stuff.
yeah. But, shit, what was I just saying? What was I just saying? Oh, yeah, right. So we came down, filled the gap. That's a technical analysis reason. I thought I was wrong because I thought that we could have, like, a clear road to ride up to the crypto summit, and then we'd come down, slam, and close those gaps afterwards. But what happened yesterday from a news standpoint, and, you could say this is all manipulated and it was all destined to happen anyway, and you're probably right. But we had around noon, 2 things happened at pretty much the exact same time. One of which was that Trump had a media outlet, and this has to do with tariffs, and this is the lighter side of the bearish news because we've known about tariffs for a long time. So, you can say, hey, this is impactful or not. But a reporter asked, is there an ability for us to avoid the tariffs with Mexico and Canada starting tomorrow, which is today? Is there an opportunity for there to be a business deal? Trump said no. Tariffs are going to go into effect. So there was that, but we've kind of expected that. The news that came out that was a bit of a surprise at just how aggressively bearish it was was the Atlanta Fed, which is similar to the Federal Bank of the United States. So there are federal banks, the Fed, run by Jerome Powell. Then you have 11 district banks underneath them. One of them's in Atlanta. And that one has a mathematical calculation that predicts GDP growth in the United States. And right now, its projection of Q1, so January to March, its projection of Q1 GDP growth for the U.S. economy over the past 4 weeks has decreased from a growth of a little bit over 3% to a shrinkage of negative 2.8%. That news came out, and right after that news came out, markets, boom, really started to tank. If you want to ask yourself why is the U.S. economic market looking to potentially shrink in Q1, it's a combination of factors. It is inflation, very much so looking to be on the rise due to new policies like deportation. Deportation's inflationary. It's also a reduction of tax revenue, which isn't great too. But you can have your opinion on that. You have proposed tax cuts, and you have tariffs, right? And tariffs go into effect. So that's the inflation side of things. And then also you have the jobs market too. And like I said in my video this morning, I'm not saying that this is healthy, but the jobs market has been very much so propped up by the federal government. It's been federal government jobs, and then also like lower part-time jobs that have really been boosting the jobs market over the past few years. And now that there are cuts to federal employee jobs or federal jobs, the thing that's really been propping up the jobs market. And again, I'm not saying that's healthy. It's healthy to have the private market be like really boosting the jobs market. Is also a thing that's going to be severely cutting down economic growth. And then you have retaliatory tariffs as well. And I'm sure there are a few other things I'm not thinking of, but all of those things are, short-term bearish for the economy and Wall Street. You've seen that reflected in prices here. So those are the main reasons as to why. That's an explanation as to what happened to prices yesterday. And now there's still speculation about what's going to happen on Friday. And a lot of people are speculating it's going to be Trump coming out and saying there are going to be no taxes on crypto. And that still has to pass Congress. But if he breathes a single word of that, you'll see speculation, boost the market again. And we are in a very manipulated market right now. So maybe, I don't know, Alex, do you have thoughts on that? Like market manipulation leading to the crypto summit, just like news drop that's positive the next day slams the market back down, news drop that's positive, news that comes out that slams the market back down pretty much immediately. I don't know, what are your thoughts?
That's basically what I see happening unless something significant changes, because the one thing that this obviously informed individual proves, whoever opened the gargantuan long and short at the perfect times, shows us that no one's coming for these people. So why wouldn't you do it again? If it worked, do it again. Rinse and repeat. And as long as we are hyper speculative, as long as we are doing all of this up and down based exclusively on emotionary knee-jerk reactions to bad news, it's going to continue. There's no reason for that. There's literally no reason for that to change. Like overall, we are not in a position where everyone is confident and feeling good about, full send this shit back up to the stratosphere. But there's still enough interest to where we're not just going to quit talking about all of it and come back in a couple of years and try it again. So you don't have the precursor ingredients to really kicking off an actual or a historically typical bear market, but you also have no reason for a bull market to continue. So you're in this kind of weird, whiplash zone. And, to your point, for sure, if what Friday ends up being is that he comes out and just, bomb drops no tax on crypto, which is insane and would never happen.
Yeah.
Everyone's going to freak out and shit's going to run up again. And then Congress, some congressional subcommittee or someone is going to be like, you guys know that's insane and never going to happen, right? And then it's going to come back down again. Or a few of them.
Well, that's exactly the thing. Like, statements made by Trump need to then go through Congress for a lot of things. There are executive orders, right, where Trump could say, I'm going to do this, executive order, boom. but reducing or getting rid of taxes has to go through Congress. And, the government likes tax revenue. So like, why would they ever do that? So like that's the thing. But it's the type of thing where Trump can say, hey, I'm going to try to do this, and it could boost markets up, and then you just have this over the past few weeks. You just had crazy levels of liquidations of longs and shorts. Isn't he speaking in Congress today? I'm not quite sure if he's speaking in Congress today, Alex. I don't know if you know, but I don't know his schedule. So maybe he's speaking in Congress. He likes to talk. So
sure, we can find out though.
Morning, everybody. Also, guys, feel free to fill the comment section with questions. If you have a question that you're burning to ask us at any point in time and we don't ever get to it, you can hop into the Discord, totally free. Hop into the general chat, tag us. We will absolutely get to Discord questions, even if it does take a day or so. The link to join the Discord, which is free, it can be found on my profile page and on Alex's profile page. Just FYI. Am I buying or just watching? I'm averaging out of my altcoin positions. I'm not selling everything all at once. I've been doing this over the past 2 days. I'm just selling a bit out of my altcoin positions. I need to de-risk because when I look at the charts, and this could change. If Trump says, hey, I'm going to try to not have crypto taxes, that's a huge wave of speculation because that's a huge advantage over like stocks and like every single market, right? So money would probably, flood into the space. So we'll see. But I look at the charts and my strategy with technical analysis says there could be like 3 to 4 to 5 months of bear market potentially here. And so I see that as potentially, and I'm using the word potentially. Okay. And so I want to mitigate my risk and just kind of like exit the market, move into stable coins, wait for a few trades that I feel very confident in, make some money there. But for the most part, I'm very much so happy to de-risk out of all my coins outside of Bitcoin, personally.
I want to ask you about this, bear market for 3 to 4 months thing. What do you imagine could happen to change the macroeconomic sentiment in 3 months?
Ooh, I know exactly what we need to change. What we need to change is you would need to have trade deals put in place with Canada, Mexico, European Union, and other countries. The UK's fine. The UK's most likely not getting tariffs put in place because they're giving Trump what he wants, which is a very attractive trade deal for the United States. And so like if tariffs get lifted, you have free trade return. You have profit margins return to companies. You'd have prices immediately fall. Inflation would start to fall. Something that's interesting that's happening right now also, and I didn't report on it, but the price of oil really, really fell the other day because OPEC, which is the organization in the Middle East that runs production of oil in the Middle East and sets prices, they said that they will be increasing capacity of oil production. Ooh, damn, I need to make that video today. For March and April. And that's really making the price of oil fall, which is good for inflation. But the issue with inflation in the United States is that the biggest drivers are food, which even Trump came out on the campaign trail. He said he was going to drive down lower prices for food, and so did other politicians. But the thing is, food prices are really hard to drive down from a government standpoint, particularly because right now it's really more so being caused by constriction in supply. And then also housing prices. And housing prices are super high. So gas and oil in energy cost isn't the main leader that's driving up oil or that's driving up inflation, but this will help put some downward pressure on inflation. It just won't outweigh the impact of tariffs. Like a 20 and 25% tariff is a rather aggressive impact on inflation, just speaking from an economic standpoint. But what's super interesting about it is that if you drive down the price of oil, you increase pressure on Russia to bring them to the negotiation table, because if OPEC keeps increasing the production of oil, price keeps going down. That's the entire Russian economy. And that is a means to try to get Russia to actually, in a genuine way, come to the negotiation table for the Ukraine war. But now we're getting away from crypto and all that. But, that is something that Trump said as he got into office. He's like, I'm going to be having conversations with Saudi Arabia and the like to increase oil production, to drive down prices, to put pressure on Russia, which is a very smart tactic. So we'll see.
So you made a couple points that I think are worth highlighting. One, I constantly resent, and I know you agree with me, the idea that you like have strayed from crypto in the conversation because all of this is related.
Yeah.
And especially at this point, you know, people cried and whined for literally years. It was literally the number one like whinge of the entire last bull market that we were just waiting for institutional adoption to come in and save us, which was really cringe and upsetting. But that's the world we live in. And now we're here. And that means that crypto is harder correlated to traditional finance in the stock market than it ever has been before. And I honestly see almost no chance of that changing in any major way.
It just won't. It won't change.
Yeah. So in that case, it's very important to think about what is happening globally. And I know, so the person who commented, I did look and correct, there's a joint address to Congress tonight at 9 Eastern. By the way, excuse me, the investment announcement appears to have been did you cover the Taiwanese?
Yeah, well, the thing is I didn't actually look to see what the investment announcement was. I just saw that there were reports from people who I trust on Twitter that said, hey, this has nothing to do with crypto. This has everything to do with a $100 billion investment over the course of a period of time from the Taiwan Semiconductor, TSM, who is the largest producer of semiconductors. If you don't know what a semiconductor is, it's a microchip. Just think of microchip. Everything that is in any of your smart devices or any of your devices, they're the largest producer in the world of them. And that is why we are so willing to defend Taiwan, because semiconductors are the oil today of the 20th century. Yeah, so it's like the single most important piece of infrastructure in the world right now. Just FYI.
As I become an increasingly more and more aggressive pessimist, I struggle to see how this is not a money motivation to get some help with China.
Well, I view it as, Trump obviously has access to economists, right? And economists are saying, hey, your tariff strategy is going to cause markets to go down. You're not going to make as much money because there's, here's the thing. He uses tariffs to do his art of the deal, right? Apply pressure, create a what's the word? Like an emergency of sorts, right? To bring people to the negotiation table. And economists are definitely telling him it's going to cause short-term pain in the stock market and the economy, right? Because that's what tariffs do. We have a large amount of history on this. Tariffs aren't good for Wall Street. They're not good for the economy, but he's using it to get a trade deal. So take that into account. So he knows, hey, we're going to lose money right now, so I need to find other places to get money. And he loves getting money from businesses. So he got a $100 billion agreement from that Japanese organization. What was it? I'm forgetting the name. SoftBank, I think it was. And now he's going to TSM, and they're announcing another $100 billion investment. So he's looking to get money to get put into the United States to counteract the decrease in the value of Wall Street and the economy, but also Doge is making cuts. He wants tax cuts as well. And if tax cuts are coming in, then the revenue of the United States goes down to be able to invest in things. But if he can get the money from outside, I believe that's his strategy, to get money from outside to be able to invest in things where the reduction in tax revenue is going to be leaving gaps. So that's my personal thought and strategy. Because if you're reducing your revenue and you're going to hurt the economy, at least in the short term, you need to find money to fill those gaps. So that to me is his strategy, and how effective it's going to be, well, we'll find out. But yeah.
I think the biggest takeaway, because there's a gajillion different things happening, and at this point, the hope that I see is that we eventually just become immune to insane shit being dropped.
No, that'll happen.
So, it does happen very quickly. We are bombarded with insane stuff on a regular basis, and you can only be hyper tapped in. And I think a lot of this is by design, but you can only be so invested in it for so long before you just kind of become numb. And so the thing that I wonder is, as we talk about the potential for a decouple, and in my opinion, that is becoming less and less and less and less likely pretty much every day that goes by.
Yeah, I don't think that'll happen until there's actually a strategic Bitcoin reserve and there's just like a continuous buy into Bitcoin by the US government. Until then, I don't really see a decoupling happening between Bitcoin and the stock market. Yeah.
But even then, I mean, first of all, we know that none of that is going to take place on exchanges. They're over-the-counter buys. And so we would have to then also improve sentiment. You're going to have a number of people who think that the idea of the reserve is, questionable. I would be super suspicious of its longevity depending on how it comes about. This is kind of the point that I've been making. If we don't remove the hyper partisanship of this entire endeavor, then the reserve is on a 4-year clock, unless something major shifts. So in that case, it becomes a ticking time bomb of potentially the biggest, bearish catalyst I could conceive. The U.S. government buying strategically shitloads of Bitcoin and then dumping all of it.
Yeah. Well, here's the thing: is I think that there's definitely the opportunity, and I made a video the other day talking about the potential increase of politicalization around crypto. Because of the expansion of the digital asset reserve. But even if it didn't include the altcoins, if it was just Bitcoin, I think there's the potential that happen. But here's the thing, though. We have 4 years until we have to think about, the Democrats potentially coming into power. And if crypto is hyper politicized, maybe undoing some of the positive crypto regulatory stuff if it becomes, an issue that both sides kind of fight over. But
to be clear, though, we need actual regulatory action to be undone, and so far we've got nothing but platitudes. So we're not.
But, these things that is true, but these things also just take a long time because they have to go through Congress, right?
Yeah.
It's going to take a year at least, and then we'll see what ends up getting passed. But if let's just say it's just a Bitcoin strategic reserve, let's say at the end of the 4 years, maybe people want to politicize it, but let's say it's been very successful, and 4 years is an infinitely long amount of time in crypto. If Bitcoin falls down to, I don't know, I'm just going to pick a number. Let's just say $50,000. Let's just say, right? I'm not saying it's going to happen. Let's say Bitcoin falls to $50,000. And then, the house is like, hey, it's Bitcoin strategic reserve now. And then Bitcoin goes from $50,000 to $200,000, let's say, by the end of those 4 years. That's a wildly successful investment. And even if you want to politicize that, it's hard to argue against money being made. So there's a very long runway here and we all think that Bitcoin's going to go up in value long term. So, there is definitely the chance here to politicize crypto as a Republican versus Democrat, kind of topic, or even within the parties kind of a topic, right? As people try to find things to fight against each other as they try to get nominations within each other's party. But if it makes money, it's hard to argue against making money and then being able to use that to fund various government policies. So, we'll see. We'll see. The whole world runs by wherever you put the money incentive. So, that could totally change things and then remove the likelihood that the topic of crypto, or at least a strategic Bitcoin reserve or a digital asset reserve, becomes something that both parties fight each other over.
Yeah, it's an interesting thought experiment because you have a few things that are true about all of this. So I made a video probably at this point 3 years ago. I've brought it up, off and on ever since then. When you think about what we've created, so first context. There's an old adage that the internet is the first thing that we have invented that we don't understand, and I think that crypto in general, the idea of a cryptocurrency, is another one of the things that we don't fully appreciate / understand, because one of the things that it is an infinite number of reset buttons. So let's say hypothetically that there is a money system in place and a number of people disagree with it for whatever reason. You feel that it's unfair, it's rigged against you, it's too lopsided. All of these are things that could easily be said about the current fiat dollar system in the United States. and in many other countries around the world, right? The wealth gap is ever widening. So what you have with a cryptocurrency is this ability to, within a smaller community, a specific ecosystem, to create a different method of transaction, a different medium of exchange that you could theoretically then begin using within that microcosm to pay for goods and services. Let's say hypothetically that a small town who was pretty much self-sustaining, I don't know, not pretty much, but you know what I mean. Farmers, local business people, whatever, they could agree that amongst each other for all things that they would use this other thing. You could technically do that. Crypto is kind of like that, right? We build these ecosystems and then you use the cryptocurrency as a medium of exchange. You can just create an infinite number of those. So every time you feel like the big one has gotten away from you, you just make another one. And we see that on a small scale repeatedly, right? I mean, how many tokens are there now? 25 plus million?
Million? Wait, is it really that tall? That tall?
It is that tall, Will.
It is that tall.
I just remember, this time last cycle we had like 16 or 17,000 and now, Pumped Out Fund is cranking out that many individual tokens like every 6 hours. So you've just got, I'm exaggerating a little bit, but it's pretty significant. So you've got millions and millions and millions. Most of them are, dead and gone and never coming back. So I don't know. I think you've just got all these different things just running into each other, right? The over dilution of the market. There's way too many places that people believe are going to be the future. Wholeheartedly, all of these things are overvalued at this point. I mean, you got to remember that we are all venture style investing into pre-revenue, pre-product startup companies, which is the nature of venture investing, right? That's how investing into an idea works. But typically these are much smaller investments with much lower valuations until you can prove that you can turn any kind of revenue. You know what I would be fascinated to see, Will, and I don't know if there's a place to look this up easily, or even just to get some sort of idea. I would love to see like the results over the last, I mean, how long has it been a thing? Maybe 4 years of all venture capital firms who have invested heavily into crypto-based startups.
I've always been fascinated by that. In fact, I wanted to ask Dunleavy to be like,
yeah,
so you guys like make money? I mean, like, clearly, these companies do,
Right. Like, are you making money? And if so, how? Because I feel like they could be. I wouldn't be surprised if they are. But I also would be surprised if any of the things that they've really made money on are still like strong businesses that are pushing and they weren't.
There's so few. I mean, we've talked about this a lot. There are, and I'm going to say this, guys, I love crypto. I love blockchain technology. You guys know I love Bitcoin. And I think there are a lot of altcoins that do really cool, useful things. But most of them are garbage, right? And even some projects that have promise, they don't make money. There's, I don't know. I'm just going to pick an arbitrary number. Let's say that out of all cryptocurrency projects, 98% of them are vaporware. Of the 25 million that exist, maybe 99% at that point. And then of that 1% that's left that have like, they're trying to do something cool, or maybe they are and it's actually being adopted. Of that 1%, probably it's only 10% of them actually make revenue. And the other 90%, they have, promise, and they're trying to do something cool and trying to do something useful, or they actually are, but they're just not, making money yet. They're not in the black, as they say. So, and that's the space. So, Alex, when you say like we are venture capitalists in the single most aggressive small startup, small business market in the world, it's a spot on assessment.
Yeah, you hit it on the head, right? Yeah. Most of these things are nonsense. You got to remember how easy it is to make these things. It's honestly the perfect equivalent is that we found a way to hyper monetize exactly what the .com bubble was. What's the famous one? Daniel, maybe you remember, was it pets.com? It was just like this famous.
Yeah. Pets.com. That was it.
And now you have the same ability so at that point, anyone could create a website for everything. And we were kind of all of the mind that like most things don't need a website, which is an insane thing to think now in retrospect.
Yes.
Hindsight being what it is.
What are you talking about? You have your store and your business and like, you put up some flyers.
Right.
Like who's going to go on the internet?
Right. It's but that, I mean, that's what it was. I remember hearing about that just because, my dad worked in it, in that whole sphere at the time. And it was largely considered to be the same thing. And then it was a gajillion startup companies, of course, that were, internet based, and someone was going to do this and that and this with the internet. And it was very similar. And the difference was that it was not hyper monetized the way that crypto has allowed for people to immediately deposit money into stuff, which is both good and bad. Good in that all of these opportunities are open to way more people who were gate kept out of being able to participate in venture investing, which I think should be the right of anybody with money.
My dad's father-in-law said to him, "Who is going to want a computer in their house?" Meanwhile, we have computers in our pockets.
Dude, something like that deserves to be framed on somebody's wall.
It really does.
That's the good and the bad, right? The good just being that venture investing, I believe, is a fine method for investing as long as you're aware that that's what you're doing. You're not like buying a share in a revenue generating profitable company that's going to work out for you for the long term. You are taking a speculative gamble on a startup's potential to become real, which is fine. Like, the one thing I don't want to get lost in translation here is that I'm trying to say that that's inherently a bad thing. That is inherently really fucking cool that you get to participate in that. I'm so stoked that I get the opportunity to do that. And in crypto cycles, in years past, that's what it was. You were judging these things based on potential and then their valuation, even though most of them were overvalued and it was overinflated because of the nature of speculation open to the biggest group of people possible. These things exploded way harder than they ever should have. And then, of course, came crashing down because, again, nature of speculation. Mm-hmm. The game has changed. And now you have venture capital firms, people who have always been able to VC invest, able to way over leverage their interest or their initial venture position into these things, at the expense of all of us, in order to play a game they've been playing forever, and most people now have no clue how to play. And there was a comment before, I don't like this. It makes it all feel schemy. That's what it is. That's why most crypto is really unfortunate. That's why I truly think that the stuff that you're going to see actually make more of a difference is going to be tokenless, or is going to use the underlying native currency of some gigantic established blockchain that has become quite corporate. Last point that I would make is that one of the big complaints about ETH Denver this year that I've seen, and I will admit didn't hit me because of the types of conferences that I usually go to are more corporate, was just that it was over corporatized. There were less booths about, cool small projects being made that were more community focused and driven. And there was more stuff, the big ass Polkadot booth, the big Hedera booth, the big Stellar booth, the Ripple booth, the Binance booth, like all the classics, right? Which are corporations.
Yeah. Honestly, I enjoyed that. I enjoy that. Go ahead.
But that's because that's what you and I focus. That's what we like. That's who we talk to. That's who.
Yeah. That's also been my entire career for 10 years. If I talk to a small startup business, I go how are you going to be here next year?
Yeah. No, yeah.
Because I talk to a corporation, I'm like, longevity.
Exactly.
More centralization though. But I don't necessarily think that's a bad thing if it's built on some blockchain tech. Sorry, go ahead.
Tomorrow morning when Evan is back, I would be really curious we'll do a little bit more of an examination on ETH Denver's in years past, because Evan's been to more of these things. Will and I, this was the first time either of us had been to ETH Denver. And like I said, I've only done huge corporate Bitcoin conferences, consensus, stuff like that, which are these huge, that's where you see the Hedera booth, the Stellar booth, the Ripple booth, all that sort of stuff normally.
Yeah.
So I'm very curious about that. But so as we Will, I think maybe it's worth it to push into a little bit about how we're navigating this, given all of these things that we just said, given all of these different examinations and analysis of what the space is, what it's doing. The fact that we Solana, for example, like, let's just take that one, but this is honestly pretty much what everything major did over the past couple days. I mean, the chart is just like, rocket ship up like 30% and then fell off a cliff.
Yeah.
Well, how are you navigating playing this? Like, what are you doing right now, essentially?
So I'm leaving my altcoin positions, keeping my Bitcoin. I'm fortunate enough to be leaving altcoin positions in profit from when I got into the market at in 2023. So I'm happy to leave the market and really spend time. And I saw some comments like, "Oh, I'm buying today," and that could potentially be good for a short-term flip. Or it's like, "Hey, is now a good time to buy coin XYZ, XRP or Morpho or Solana, whatever coin." And I say you need to look at how long a bear market can last. Paint the worst case scenario for yourself, and then ask yourself how likely that is. And you do the same thing in the bull market too. Like, what's the most bullish case scenario and how likely is that to happen? And then try to trade off of that most bearish case scenario. Like, try to make a plan off of that. And the bearish case scenario we're looking at is stock market's falling. US GDP growth is expected to fall. So that's like the macro picture. So the macro picture is bearish. We've been talking about a potential recession for a year and a half or so, but now there's enough things happening where it could really happen. Inflation is sticky, unemployment's going up, yada, 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 all the things we've talked about. So you go, okay, cool. The worst case scenario is the recession's actually starting right now. In which case, how do I think Bitcoin is going to react? If you look at the prices here, clearly it's negative. We're very much so tied to the stock market and that, so you're expecting prices to go down. Now, if you go back and you look at other bear markets, and I'm talking about the stock market, you can see that a bear market can last like 6 to 12 months, essentially, with like a real big bottom slide happening pretty quickly, and then prices kind of remain in that area and just kind of do a slow thing before really starting to go up. And that's the same for Bitcoin as well, if you look at the Bitcoin bear markets. So you go, okay, cool. If we are really entering a bear market right now, prices will continue to fall and we'll start to find a bottom over an extended period of time, like on the monthly chart, really slide for, a 5, 6, 7, 8 months or so, which means I need to stack up my cash and get ready for that potential scenario. And if that scenario never comes, that's fine. I allow the market to prove to me that there's strength higher up, and then I re-enter the market. I allow the US economy to show me, hey, it's resilient again. We have some good macro data. The overall picture is starting to get a little bit more bullish again. And then that happens, and then it fluctuates down to all the various asset markets. That's how it works. Macro economies start to look better, flows down to Wall Street, it flows down to Bitcoin, and then it flows down to altcoins. That's just how it goes. So I'll sum this up by saying, stop looking at the daily chart, even though the daily chart is, stop looking at the daily chart. Zoom out to the monthly chart and just take a look. And if you have technical analysis experience, do this. If not, it's not going to be useful. But zoom out to the monthly chart and just see where general support could possibly be. Pull up your indicators like the MACD, the stochastic RSI, the RSI, and look to see that they are pointing down right now. All the indicators are pointing down right now that I like to use. And understand that, okay, cool, if this is a bear market, we have months of this. We'll have some rallies along the way, but months of downwards price action. So if that's a potential scenario, let me protect myself from that. And then if the market proves to me strength at higher levels, I can dive back in. But I'll end this by saying, as an investor, you make money by, yes, your investments going up and having successful trades, but odds are you're going to lose some trades. So when you lose those trades, you need to lose small so that your wins are big. Because a lot of people typically lose more trades than they win. But if the trades that you lose small, and the trades that you win big, you make money at the end of the day. So that's the thing you need to think. You need to think that I don't make money trading and investing by having huge investments. You make money trading and investing by making sure that when you lose, you protect yourself and you only lose a little bit, and you put yourself in positions where you can really ride something up, once or twice. And if you lose 3 or 4 times, just you lose 5 or 10% of your portfolio and save yourself to get 2 wins that are like in the 50% to 100% to 200% on an altcoin or something like that. So that's what I wanted to say. I went on a bit of a tangent, touched on a few too many things, I think, in order to answer the question fully. But zoom out to the monthly time frame, be patient, build some cash, allow the market to prove strength to you, that it is worthy of your money.
Yeah, I think.
Will, please just tell me how low ETH will go. Can take it. Give it to me straight. Go look at my altcoin video. I said it could go. I said in the worst case scenario, it could go down to $900.
Yeah, which would, small flex, almost be down to my average buy price.
Yeah.
Okay.
I can't take it. I lied. That's the worst. I go watch my altcoin update video. There's a huge chunk of price history support for Ethereum between $1,500 to $900. I'm not saying it will go to $900, but like I said, find yourself what the worst case scenario is and start to build a plan for that. That's what I would say, because prices can go incredibly low in a bear market in crypto if you're not used to it. And Alex you said a great thing the other day, which was, hey, if you're down 40 or 60%, that down 40 or 60% can go down another 90%. That's just how crypto bear markets work, if we are in fact in one.
The other thing, so this is why I always say, I mean, if you've listened to the show more than once, you've heard me say be agile and, be willing to change your mind when presented with new information many, many times. This is why, because in 2021, guess how many people, the second that the market started to dip from the all-time high that was set at the end of November 2021, guess how many people were like, yep, okay, guys, pack it in, bear market time? Fucking nobody. Okay? No one. Guess what happened 4 years before that? Fucking nobody. Okay? I'm being hyperbolic. Maybe someone was calling it just the way that there's always someone calling for a bear market. But the point is that the bear market just sort of happens. It's not like a thing that we all like agree to meet up on and plan out. Then everybody would be a gajillionaire. Okay, these things just sort of go. And then you're always questioning whether or not this is actually it, is it not? And you really only know that it's here after however many months of just bleeding and suppression and boring and more people declaring that it's dead and over. So just keep that in mind. That's why I pretend that every time we see an unsustainable pump like we did over the weekend, I pretend this could be it, so I'm going to take profit accordingly. There was a question earlier about what to hold during a bear market. Here's how I do it. And here's how I'm going to be continuing to do this moving forward, regardless of really what we see. I always have exposure in both directions so that when the market does something unexpected, which it does from time to time, I am prepared to capitalize in that direction, at least somewhat. What does that mean? That means that I always have a stablecoin position, and I'm not exaggerating. Literally always. There is no point ever, no matter where we are, there will never be a point when some of my portfolio is not in stablecoins, because there will always be market corrections. There will always be dips. There will always be movement to the downside, and I will always be in a position to take advantage of it if I choose to. And then on the flip side, I have a few things. I have a very small portfolio. I have a few things that I have long-term faith in, and those things I always have at least a little bit of exposure to. The only thing that changes, kind of like Will said, depending on a whole bunch of contributing factors, the ratio. So like right now, I am probably 60-40 stablecoins and exposure to stuff. My average buy prices are very low because I've been here forever. So, in that case, I'm less worried. We could continue to drop it. And if we got to the point where I was like at break even, that's hard to say. We would have to come down a significant chunk. And I think then other stuff would probably have had to change. So I'm unsure, because Willa kind of plays into that idea, how low could Bitcoin go if, let's just say hypothetically, it breaks through the, what was it, 70,000 something dollar mark that it was on November 5th, which, just for context, historically is the new bear market bottom, whatever it was on the date of the presidential election.
Yeah. Well, here's the thing, and actually I'll share my chart. Actually, let me do this real quick. And perfect. Okay. Let me clean up my chart a little bit. Here we go. This is fine. So if you're looking at technical analysis and you want to take a look at Bitcoin, be like, how low could it go? This is what we'll show you here. And this is a bit of a range. So what you want to do is you want to find big chunks of price action, right? Because this is where you have support levels and resistance levels. And this is that 1, 2, 3, 4, 5, 6, 7. Wait, can I not count? 1, 2, 3, 4, 5, 6, 7, 8. 8 months of consolidation that we had where markets got super boring and altcoins really, really fell. This, a lot of us were saying, looks like Bitcoin was trying to print a bottom for it. And there's a ton of support history here. And if you look at where that is on price, that is between $73,000 to $50,000. And so if we are in a bear market, you could totally have price come potentially all the way down. This is the worst case scenario, I think, $50,000. And it's also where the 55-month exponential moving average is. And the monthly stochastic RSI still has plenty of room to the downside. And, when you're in a bear market, it can even spend quite a bit of time here. Although I am of the opinion that the 4-year cycle is dead. It's totally dead. And that all markets are being accelerated. So in a bear market, let's say worst case scenario, we come to 50,000 here. I think instead of spending, basically a year to a year and a half in a bear market, I bet we only spend like 6 months in a bear market. And then we move forward just because the market's been hyper accelerated. But if you're asking me, how do you use TA to find a potential bottom? This pocket would be the best pocket to be dollar cost averaging into Bitcoin. But during this time, I would not be touching a single altcoin until I saw the monthly stochastic RSI dragging its ass. And then I would start to buy some coins. Because when you have Bitcoin start to recover, while Bitcoin recovers, during this time, altcoins still went down in value. And it wasn't until we got a big pump up in Bitcoin liquidity that you started to see altcoins go up as well. So that's just how, if you wanted to try to find a worst case scenario, $50,000 for Bitcoin would be it. And that would beg a question, which is a scary one. MicroStrategy's average buy position for Bitcoin is $68,000 to the tune of, I think, $34 billion. For total investment. What happens when the average price of Bitcoin? Here's the thing. MicroStrategy has before I start potentially just spreading FUD, MicroStrategy has been below its average buy position of Bitcoin before, and it just kept buying Bitcoin, and they lowered their average price, and they were fine. Nothing happened. Their loans that they took to buy Bitcoin didn't come to roost and destroy the company. But it does create a question. You're going to see a lot of FUD at the time, which I think is potentially warranted because it is a potential huge problem. If Bitcoin spends a lot of time below MicroStrategy's average buy price and some of their loans come due and they can't pay some of those loans, they would then have to start selling assets in the company to start paying that. And Michael Saylor probably touch Bitcoin last. But if it got to the point, he would be legally obligated to sell assets in the company and then potentially Bitcoin if we spend a ton of time below his average price of Bitcoin, which, could spell disaster. But again, he's been in that position before. So he was able to get through it without selling any Bitcoin. He just bought more of it. So, we'll see. But it's going to be something to definitely keep your eye on as a potential major black swan event.
So I make the same series of videos every single bull bear cycle. What if we don't get the bull market we're expecting? What if we don't get the bear market we're expecting? And present the opposition thesis to both of those potentials. I will say that without doubt, without fail, every time. People say that the cycle is accelerating, the 4-year cycle is dead, the bear market, whatever the next one is only going to last several months. People said that everybody said that last time.
There was no reason for it to last time, though.
There was this idea that all of this new renewed interest was going to shorten the cycle period and sustain us through the bear market, and that people would, because of new renewed faith and attention in the industry, flock to things like gaming and DeFi to take advantage of low prices to accumulate as much as possible. And in reality, what happened is everybody got discouraged and pieced the fuck out. And I posted videos to absolutely nobody for a year and a half. That's what happened. And that's probably what will happen again, is that people love to talk a big game. When we talk about things being over or things, being bearish or down, it's not like a forever kind of thing, right? It's exactly, this stuff is cyclical. I do believe that the cycle is breaking. I don't think I believe that 100% of it is broken. I mean, half of these comments here are still about, this indicator or that indicator hasn't popped the same way or do whatever. And, some of them will, some of them won't. It's kind of a question of, which things will deviate from the norm first and which things, won't. Think about last time, right? Who was one of the most egregious missteps of the entire bear bull flip flop cycle last time? Plan B screwed that whole thing up, and that was a pretty famous one. That was reliable up until it wasn't.
I was relying on it quite a bit as well, and ended up being a mistake.
That's kind of what I'm saying. Like if you want to know, the secret to winning at this stuff is a lot simpler than people think, and I will say that it's simple, not easy, because it takes a lot of determination, grit, and self-control and discipline to weather all of the storms. But truly, the secret is not leaving, and that has nothing to do with when you over leverage or when you buy a bunch of stuff or when you start putting more money into stuff or whatever. It just means that no matter where we are, no matter what mistakes you've made, no matter which missteps you've made or which problems you find yourself in, or where you got liquidated, or where you made a really good trade or a bad trade, whatever, it just means that, regardless of all that stuff, you just refuse to go away. That's how you win. Because take stock of all of the people who say they're not going anywhere, they can't wait for a bear market, they're going to leave. And I say it bluntly like that because I'm really hoping to use a little bit of frustration and anger to inspire some of you to prove me wrong. Because every year, without fail, every year, people tell me in my comments over and over and over again that they can't wait for the bear market because they can't wait to accumulate at crazy low prices. And then things start to crash and they're just over leveraged because they never took any profit. And they're like, I just need one more pump and I'm getting out of here forever and I'm never coming back.
I kind of want an Amy story where it's like I have a number of expensive things and I'm just like in the apartment as like decorations and shit. I'm like, I could sell all of that. That's that much money. And then I could buy Solana at $9 again. I'm not saying Solana's going to $9, but that was what happened after the FTX collapse. And Amy, she sold her nice car to get a much, much, much cheaper car and took that money and put it into Solana exactly at $9. And then it's just like, what a crazy fucking trade. And now I'm just like, I don't need these things.
Right. Yeah, I mean, it's one of those things, the last thing that you want to do is be so over leveraged to the point that when, whatever bearish period we walk into happens, you are caught with your pants down. And this is why I'm constantly literally begging people to take profit. And there was a really great conversation that came up in Discord yesterday about, taking the idea of profit taking. And maybe this applies to someone in here. So I think it's worth going back through. Hypothetically, let's say that you are underwater on something. Let's say let's just keep with something big, ETH. Okay. So your average ETH buy price is $3,000. You felt good about it. It's significantly below the all-time high and things looked like they were on the up and up. There was an incoming friendly administration, all these different things, whatever it was, led you to a significant investment in Ethereum at $3,000. And now we are at whatever we're at. I don't know off the top of my head. Was it probably 22? or something. So you're down. Yikes. 2068. Down a casual, a balmy 13% today. So, okay, you're underwater. How on earth could you take profit in a position that's underwater? So let's say hypothetically that Friday rolls around. It's like we said, it's a very bullish sounding announcement. People get very excited. Markets get reinvigorated. Everything pushes. Ethereum goes back to $2,500 in the span of a day. Let's imagine kind of like we saw last weekend, where in the span of 3 or 4 hours, lots of things went up at least 30%. Cardano did 70% in 3 hours. That's obscene.
Yeah.
Okay, so that happens. You are still underwater. Your position is still in the red, but on the day, it's up 25%. You can take profit at that point and translate some of that ETH into a stablecoin position. And then you can hold that stablecoin position expecting that that unsustainable pump up is going to correct and go lower. What happens when you take that stablecoin position? 1, you have capitalized on a very green day. 2, you have locked in a capital loss, which you can use to offset a capital gain. So that becomes a tax benefit against your tax obligations, should you then put yourself in a position of profit. Let's say then what happens is the market does what the market does, and a reality check comes in. We don't have any big reasons for the pump to continue. It's way too aggressive, way too fast. Things correct. They come back down again. Now Ethereum is back to $2,200. You have now a pile of ETH and a pile of stable coins. And you can take that stablecoin position and put half, 3/4, a third, whatever you want back into ETH now at a lower price. Now, 2 things happen. 1, you've re-expanded your ETH position at a lower price. And 2, you have lowered your cost basis, meaning your average buy price for Ethereum is now less than $3,000. And you can continue to do that to work on that average to bring it down. So don't fall into the trap of thinking that just because you are now not in the green, you are incapable of capitalizing on a really green day. This is, like Bloody says here, this is the idea of swing trading. And there's 2 ways to kind of think about it. And one of them is the first way that I ever thought about it. And it's what led me to getting absolutely hosed, which was, I'm going to swing trade. Watch me do me. And try to think that I'm about to start doing all this TA that I've never done before, that I'm going to be like watching charts and, stalking the news and living online and doing all this sort of stuff and making super measured purchases and sales at specific days, at specific percentage points, up and down, whatever, making this complicated plan with a bunch of rules that I had no hope of remembering, let alone following. And then getting myself into a position where you finally see a green day and you're like, oh, well, it could go up more. So I'm not going to sell now because I just a little bit more. Then it crashes. You're like, oh, shit. Okay, well, it's going down now. I should buy some. Well, I'm not going to buy here because it's probably going to go down lower. It goes back up again. And you just end up sidelining yourself on the whole time because you're overthinking. So the shift that I made that fixed all of that for me was not looking at charts, was not stalking the news, was not living online. It was actually tuning out and just checking prices every now and then and being like, oh, look at that, double-digit percentage points up or down on the day. That seems unsustainable. Let me take some action on it. And if it's red, it's a little bit of a buy. And if it's green, it's a little bit of a sell. And like I said earlier, I'm never moving with the entire position. Ever. Okay? The only time I have ever completely exited a position into anything is if something happens with that specific project or investment that makes me change my thesis, where I'm like, I no longer have any confidence in this. I'm done with it. That's the only reason.
Yeah, that or you made so much money that you are willing to leave the market entirely.
Yeah, exactly.
Yeah. Also, this will be posted. I saw the comment. This entire thing will be posted. I have to post yesterday's episode as well, but I will be posting both of them to YouTube today.
Yeah, no, it will. Okay, sweet. Yeah, they'll go to YouTube, and then you can find it at the links in both of our profiles, the links in the Discord.
The Rise Up Morning Show on YouTube.
The Rise Up Morning Show on YouTube will get you there as well. Yeah, I mean, that's, to be very blunt with you, that is the way that I play this. And that has been the difference between me round tripping $250,000 in my first cycle and the fact that the altcoin markets and Bitcoin and everything could drop another 50% from here and I would still be in the green. And I would never call myself a technical analyst. I wouldn't call myself an expert trader. I literally just hyper simplified the process. I recognize the fact that a lot of this stuff is silly nonsense, and I just became agile. And I also admitted to myself that I do not know what's going on. Even though I've been here for a very long time, it's easy to think to myself that I am some sort of expert. I know a lot. I don't know everything. And I just admitted that, like, there are things I don't know, and I'm willing to change my mind when new information presents itself. That's literally it. That would, you know, it's simple. It's not easy. It took years of practice to like get comfortable with that because it's tough. You know, it's tough to stomach.
Yeah. And then you have someone like me, and yeah, I love TA and financial analysis and all that, but my TA is pretty simple. You can take it to a fucking so many more levels, and I've done that before, and I found it too complicated, and it overwhelmed me, and I kept kind of things pretty damn simple from a TA standpoint, and I win more than I lose. I still lose sometimes, but again, try to make sure when you lose small. And if you want to learn more about TA from like an intro level in a simplified way, we do have a course available for sale on our Discord. Alex, I wanted to ask you, if we are in fact heading into a bear market, what does your portfolio look like in a bear market? And then what types of things are you doing potentially on chain or off chain as investment decisions? Like maybe using DeFi or a lending protocol or things like that.
Yeah. So I always have Bitcoin. That's the thing that I'm just sort of expanding. The altcoin positions, I will end up with some because, like I said, the things that I believe in long term, I never exit 100%. Just because I always want to be able to participate in some, erroneous pump in the markets. So I will continue to hold some Solana, some ETH, and a little bit of Avalanche. Not a tremendous amount. Those are things. All of those things are what's actively being scaled back. You know, like every pump I take some profit, and then every major crash I put a little bit less in. To continue that cycle. So at every one of those swaps, I end up with a slightly higher percentage point towards the stablecoin stack. And then I'm just really looking for, a reliable, safe interest rate to continue to earn on the stablecoins for the whole time. So right now that looks like Aave, although I am exploring some different options because I want to be able to talk to you guys about different things. So I'm kind of going through a giant list of different protocols I'd like to test out that I've just never used before. Aave I pick as my safe play because it is the biggest DeFi protocol by TVL, which is an acronym that stands for Total Value Locked. It's a measurement of how much money is currently sitting in an ecosystem, whether it's being staked, whether it's being placed in liquidity pools, whether it's just living on the platform in custody, that sort of stuff. The interest rate there is lower, but my only two risks there are that the biggest DeFi protocol on the planet, something with over $20 billion of TVL, goes under, or that USDC, the stablecoin, depegs. Both possible. Nothing in the world of finance is no risk, but as far as things go, this is about as low risk in crypto as it gets. I think maybe besides just holding Bitcoin forever. So, in that sense, Circle, the company that owns USDC, is dominating. They are absolutely crushing. They're growing every single year. Mm-hmm. If you go look at the market cap of USDC, they're just printing more. And for context, the way that you print more USDC is people buy it. So every time they print, it's because someone is purchasing more. Same with Tether. Same with every stablecoin. So that's what it's going to look like. As we get into the throes of the bear market, I will be, continuing to mess with more and more DeFi protocols, basically just looking for places to earn reliable interest. The ETH and the SOL that I keep will be staked the entire time because I'm not going to be necessarily looking
to stake.
Yeah, this is the time to stake. Interest rates are going to be what they are. I'm going to look for reliable staking custodians. I will absolutely share what those end up being when the time comes. And then stuff will get parked there. And then what I'm going to do is spend a dedicated portion every single day to just read stuff that's being built, that's going on, things that are being announced, keeping track.
Watching DeFi Llama, trying to see whose TVL survives a bear market period and potentially grows,
Exactly.
right? Because then those are the people where you go, oh, I'm going to buy this during the bear market when I decide to buy altcoins again. Because when you enter a bear market, if you just entered the market in 2024, you've seen a lot of things that are crap, like go up, like a lot of meme coins, a lot of stuff that doesn't have a lot of strong fundamentals go up in value. And that's just a telling of the time of where you are in a air quote cycle. In a bear market, you have Bitcoin go up first. And while Bitcoin starts going up first, you can still have altcoins go down in value. But then you have a few select winners. Like in 2023, it was Injective, Solana in a big way. In like a handful of others, but those are the two that I remember that did really well. And they were starting to get good fundamental adoption, and they started to pop up far faster and far sooner than anything else. So in a bear market, Bitcoin goes up first, and then for the next year, traditionally, it's just coins that have good fundamental adoption. And then into the halving and after the halving, you then get coins that are far more speculative. Go up in value and meme coins, and that's how things go. So that's why in a bear market, you really want to try to practice your skills of trying to understand how to read on-chain data, use free sites like DeFi Llama to understand where are money and users still going, what's dying, what's actually held up and maintained strength or even grown in strength on-chain activity. And we have guides and a ton of videos talking about how to read that stuff and analyze it. For me, in a bear market, I'm in Bitcoin and I'm in stablecoins. And then once I start to see a potential bottom on a monthly time frame, I'm going to be buying Bitcoin with the profits that I made from this cycle. And I will be looking at the coins mentioned in the digital asset reserve. Of them, you have Bitcoin, Ethereum, Cardano, XRP, and Solana. Of those, I like Bitcoin, I like Ethereum, and I like Solana as things that meet my expectation, meet my qualifications. I mean, you guys know, I've spoken a lot about XRP, but if XRP and Cardano and also Cardano get added to a digital asset reserve and the government starts buying it, they'll go up in value. But the thing is you need to see what clears the house from that. So there's still, there's not like a final signature on what's going to be included in there. But if those coins are going to be in there and speculated on, I look at Ethereum as it has really good adoption, but the adoption is being eaten away by Solana. So I'd probably buy more Solana simply because it has really good on-chain development and fundamental growth. And then I would take that Solana as the main altcoin I'd be buying in the bear market. And then I'd be taking it to Marinade and I'd be staking it because Marinade is as safe as you can get in a DeFi staking environment, while also giving you the best staking rewards out there for Solana. So I do that, and then I'll probably explore taking my USDC and going to probably leaving some right on Coinbase to earn the 4 to 5% it has, and then taking a chunk of that also to something like Morpho that as of right now, and this could change, but as of right now offers the best yield for lending pools on USDC. So I'd probably do both of those, wait to see a bottom for Bitcoin, buy Bitcoin with all the profits that I made. And then what was left, I would most likely just buy, I'd buy Solana heavily and then Ethereum second. And I'd look to stake Ethereum probably in I don't know, I'd have to explore where the best rates are right now. And then I'd stake Solana.
Yeah. Yeah,
Oh, and I would be interested in buying Ethereum, even though it's been kind of shit right now for the past like year. Because I think staking gets turned on for the ETFs in about a year or so, and I think that'd be a big boon for it. And I think it's far more likely to make it through Congress to be added to a digital asset reserve pile than the others. And then Solana, I love the on-chain adoption of it, but then also there's the potential speculation of it also having an ETF created for it as well. That could happen in the next year or so. So that would be what I would be looking to do and why.
Okay, several questions have come up. a couple points. Tech CEO is asking about just how can we say that this is manipulated? I believe that you are genuinely asking. So I really, truly, and genuinely struggle to even come up with the opposition to the opinion that this is all manipulated right now. We are seeing nonsensical, weirdly timed batches of announcements and posts that lead aggressive market movement in one direction or another being done without any forethought being given to how the market would react. And there was a time when stuff like that would be called market manipulation and was illegal. We do not live in that time any longer, unfortunately. So it is now open season. When you see massive positions being taken one direction or another, and then within days, a person in a position of extremely elevated power takes the impetus to push the market in the direction that would most benefit whatever that gigantic position was, that's quite literally the definition of insider trading and manipulation. It happens every single time. You've got, even when it's not overly successful, just look at World Liberty Financial. They bought a metric shitload of ETH, and then people on the board and the president's kids started actively tweeting about how now is a great time to buy this stuff. It was obviously an attempt to push the market in one direction. The side effect
to bring in liquidity to squeeze.
Yeah. I mean, just look at
Which
this.
Is what ended up happening. That's one thing I'm curious to see. I'm curious to see if certain tweets by politicians about crypto and specifically where they're timed and how the market goes. You'll see that we need more data to figure it out. But as of right now, there is a trend developing where, like Eric Trump, as an example, says like now's a great time to buy Bitcoin or Ethereum. He's done that a couple times. He's deleted the Ethereum one before, and then maybe a little bump, and then poof, liquidation. So it'll be interesting to continue to watch that. It might end up becoming like an inverse Kramer kind of thing, or like a Nancy Pelosi index thing. We'll see.
Yeah, and Eric Trump is quickly becoming Kramer Jr. You've got this massive position opened. The president's tweet comes out, talks about the reserve, markets explode, happens on a Sunday. Eric goes, now's a great time to top blast because you guys get to front run TradFi tomorrow. And then TradFi comes in and it's like, you guys are cute.
He goes, hey, guess what? You guys are adorable, and then just squishes on us like we're ants, because we are ants to them.
Yeah.
Because they have.
And I'm not saying that, I believe that any objective people were taking Eric Trump seriously. I'm just saying that is another piece of evidence of attempted, if not successful, market manipulation. I think that if you were talking about Michael Saylor specifically, he's not somebody who ever really does much talking. He just buys. So one could say that Michael Saylor has noticed over the course of time that when he goes hard, people tend to think he knows something, and it's like it inspires more confidence in the asset. But to be very honest, he is becoming the boy who cried wolf, and it's just sort of like an average Thursday that Michael Saylor puts another $1 billion into Bitcoin. So to me personally, it starts to mean less.
Well, I understand what you're saying. I think it's unfair to categorize Michael Saylor as the boy who cries wolf, because he's not saying, I wouldn't categorize him as that. He just is the ultimate dollar cost average Bitcoin investor. He just buys. He doesn't care what the price is. He just buys, right? It's not like he's like, I bought, pump the markets. It's bull market time. Right. If he did that, then he would be the boy who cried wolf. But he's just out there being like, I bought.
That's for sure. Yeah. No, that is fair. And last thing I'll say on this, how do we prove it? It's all on chain and they're tweeting in public. There's literally nothing to prove. All you have to do is do a little bit of light reading into two things. Just look at the chain and then just read their Twitter profiles. I'm not trying to be like facetious or a smartass here, but there's really nothing. It's not that deep. These are people who really like money, who are investing in things and then telling all of us that they're making good investments and we should too.
That's about it.
Brother, listen to me. Tech CEO, I love you dearly. Listen, just there's nothing to show. Just go to their public profiles and read what they're saying. And then the best places to do the on-chain checking, if you don't want to just like raw dog ether scan, would be tracking wallets on Arkham Finance. And there's a couple of
ARKM.
ARKM.
Yeah.
And yes, their wallet addresses are public. And it's not even that we have all of the guarantees that every wallet doing this stuff is exactly in their custody. But for example, there are a gajillion watchdog accounts on social media that post major market movements and stuff.
Doggos are hungry.
What?
Doggos are hungry.
They already ate. He's just a little asshole. So Arkham does a good job of connecting specific wallets to specific people or to specific companies. That's how you can see the World Liberty Financial accounts and all that sort of stuff. And those are public. Those have to be disclosed. But in terms of which one of these random ETH addresses could be Eric Trump's personal address or something like that, a lot of that is sort of guessing, but the guessing becomes more and more and more accurate over time when you see the timing of the move. So like, for example, taking a $200 million long at 50x leverage 2 days before a gigantic announcement that was obviously pre-planned, that it's very safe to say that whoever did that, considering the fact that Bitcoin was in a downtrend and a 2% drop from the opening of that long would have liquidated the position, it's pretty safe to say that, okay, sure, it could be a friend or relative. I don't understand how you can look me in my eyes and tell me that's not insider trading, but I think we can let this one lie for now.
It's impossible to know, like, for 100% certain whose wallet it is, but if you see certain tweets and certain wallets doing things a certain way right at that same time, you can imagine that there's some kind of connection. You might not know exactly whose name it is unless, of course, they publicly state what their wallet is or there's some kind of disclosure. But like, if you see a tweet or a Truth Social post or something like that, and then 2 minutes before you see the same wallets doing the same things, those are the types of things that the watchdog alerts that Alex mentioned. There's a lot of them. You can find them on Twitter too, that they then grab onto and start to report on.
Yeah, listen, dude. Part of the ability to like learn to play these games and to conduct yourself and navigate this stuff safely is not being so resistant to admitting when something is what it is. Like, how many times does the duck have to quack before you think to yourself, maybe this is a duck? Mm-hmm. If you continually see massively leveraged positions or huge bets being taken right before big announcements happen, honestly, I believe that it's wildly misguided and diluted to look at that and think to yourself, no, this is just another big coincidence. That's wild to me. I really don't know what to tell you, dude, to be honest.
Alex, on that point, I have a meeting at 9:30 I have to run to. So I think it's time for final thoughts right now. So do you have anything else you want to kind of tag on to that?
If you want to do final thoughts, let me take a quick scan because I feel like there were two more questions that I wanted to at least quickly answer. And I just need to read just a tiny smidgen. Give me just a second.
So here's what I'll say. Somebody asked, like, hey, do you think Morpho and Aerodrome can survive a bull run? Here's the thing. For any crypto project I'm going to speak to, anything that has good fundamental adoption, like Morpho and Aero, the solution, the decentralized application, will survive. For Aerodrome and Morpho, Aerodrome is the de facto DeFi solution for Base, and I think Base will continue to do well. Morpho is the best lending protocol in all of crypto right now. It will continue to be used. But from an investment standpoint, those tokens may never go back up to the high that they made. That could very well happen. And if you look at both of them, Aerodrome is a highly inflationary token, and Morpho's inflation over the next 6 months, from April over the next 6 months, there's an additional 13 or 17% of the supply that will be issued during that time. And then it goes back to a very, very small inflation rate. So if you have the supply of Morpho token being increased over the next 6 months after April, at the time of a bear market as well, that is double extra bearish pressure. Afterwards, could Morpho's price come back? Yes, in fact, it could come back more easily than Aerodrome because the daily inflation of Morpho won't be nearly as bad as Aerodrome. But Aerodrome's supply, by the time a bull market comes back, if we are in a bear market, will be such a heavier token that Aerodrome as an investment might never get to $3. It might never get to $3 despite the decentralized application, the decentralized exchange being wildly popular, right? It might never come back. It might never get back to its high. And Aerodrome's a token that meets that profile. Morpho could come back more easily than Aerodrome, but maybe it never does despite the good fundamental adoption that I imagine it will continue to have because it's been around for 3 years and it's been a phenomenal lending protocol, right? And you can apply that to every coin out there. And that's the thing. That's my final thought.
Good deal. So a couple quick points to make for my final thoughts here, and then if I missed your question, I am really sorry. There's quite a few comments, so please feel free to drop it in Discord and tag me, and I'll get through all of them today. So there was a question about staking. I actually just posted a pretty lengthy video about kind of the one-stop shop for staking information. So these questions specifically, do you have to do it on the exchange? No. Some exchanges do offer staking services. When you're doing it there, you're just earning interest like in a savings account. You're not actually staking. And you are earning less APY, but you are exposed to less risk of there being, something that goes wrong on the DeFi protocol level. I would say different risk. Yeah. The exchanges, of course, have their own risks. So when you're staking, what you're doing is contributing or locking up your cryptocurrency to support whatever blockchain that crypto lives on, whether it's ETH, whether it's Sol, whether it's Avalanche, whether it's Polkadot, whether it's anything else that is proof of stake. It's worth doing if you have no immediate plans for those cryptos and you would like to earn a little bit of interest. Be aware that earning interest on staked crypto is a taxable event. It counts as regular income, so you have to keep track of that. And if it's being done on an exchange like Coinbase or something, they will do it for you and they will deliver you tax documents at the end of the year. So less to worry about there. That's another potential benefit to doing it on an exchange. There are tons of different ways. And I think like in my video, I even pointed out that just through the Phantom app, for example, there are some staking options there. Marinate is another great option. I don't believe you can do that through the Phantom app. Or through Solflare. MetaMask also has native in-wallet staking for Ethereum. All worth looking at. The other point that was made was just about Solana. Curious about kind of why we picked the things that we picked in the portfolio and why not. For me, the Solana thesis is pretty simple, and I'll make this my final thought. I don't necessarily at this point ascribe to it being an all-out tech battle. What I mean by that is, who's to say exactly what the best tech is? That's sort of an overplayed marketing buzz line that is tossed around in crypto quite a bit, often by people who are not remotely qualified to tell you what is or is not the best tech. We are in a new industry and there's lots of different things being experimented with, and no one knows for sure which one is going to be the ultimate best. So all of it is sort of a speculation. At this point, several other factors also do matter. The blockchain itself or the project, the protocol, the crypto, whatever we're looking at has to work. But beyond that, you have to be able to tell a really good story, which is effective marketing. And you also have to be able to attract a user base and a developer community to build things for the base of users that are there on your chain doing stuff with the ecosystem. So in that sense, Solana is far and away outperforming literally everybody. And like I said, I'm not interested in this particular conversation, in this investment thesis, having the conversation about who's better technically than Solana or who's had less downtime. The people who are invested there and using that ecosystem have proven time and time again that they don't really care. And so that's kind of why. Why did the giant meme craze happen on Solana? It wasn't that there was a giant meme craze on Solana and that's where all the people went. It's that all the people were there. So all the criminals went there.
The criminals went there. Yeah, exactly.
The criminals are going to go do crime things with their crime buddies, exactly where all of the people and all of their money are. It has nothing to do with, it could have been any blockchain. People who are trying to steal and grift are very happy to steal and grift.
Are you going to fish where the fish are, or are you going to fish where the fish aren't?
Exactly. Yeah. So if you see fish, that's where you throw the line. So that's really the end of it. And as Christina says, she's very worried that Will's going to be late for his meeting. Stop talking.
Yeah, I mean, I was gonna hard stop you right now. Actually,
it's okay. If you have any outstanding questions, drop them in Discord. Tag us. We'll be around. Thanks to everyone for hanging out and tuning in. And Will, thanks again for hosting. We'll be back to normal tomorrow morning with the full setup on all of the platforms. With Evan back from his trip, and can hear all about it and do it a final ETH Denver comparison deep dive and get back to normal.
Yeah, which we're looking forward to, because the show's not the same without Evan's really guidance, leadership, and also soundboard. Mostly the soundboard. But everyone, thanks for tuning in. If you have any questions that we didn't get a chance to get to, hop into the Discord. It's free. Tag us. You can find the link to join on my profile page, on Alex's profile page. If the link doesn't work, send me a DM. I'm super behind on my DMs. In fact, I have over 200 DMs to get to. So I will be trying my best to get through them throughout the course of this week. Thank you so much. Have a good day. Do good things. Be good people. Make a bunch of money. See you guys.